Welcome back to Market Matters, your guide to understanding the Indian stock market. In this chapter, let's understand a fundamental question. What is the stock market?
Just like you go to a supermarket to buy groceries, investors go to the stock market to buy and sell shares. The stock market is the platform where all buying and selling of company shares happens. Unlike a physical store, the stock market operates electronically. You access it through your computer or mobile via a stockbroker, an authorized middleman. In India, there are two main stock exchanges: the National Stock Exchange, NSE, and the Bombay Stock Exchange, BSE. Earlier exchanges like BGSE, CSE, and MSE are now either merged or shut down.
The market is a mix of participants, retail investors like you and me, NRIs and OCIs, Indian institutions, foreign institutional investors, mutual funds and asset managers. All are here with one goal: to make profitable investments.
Since money is involved, emotions like greed and fear can lead to unethical practices. That's why a regulator is essential.
In India, the regulator is SEBI, the Securities and Exchange Board of India. SEBI ensures that markets remain fair, transparent, and safe for investors.
Let's look at the key entities that form the stock market ecosystem.
Each of these plays a critical role,
Regulated strictly by SEBI to keep markets functioning efficiently.
In the next chapter, we'll explore how these intermediaries help you invest smartly.
Don't forget to like, subscribe, and share Market Matters for more insights.